I frankly think it's a tragedy in America that the small investor has been convinced by the media, big institutions with all their computers and all their degrees and all their money have all the edges, and it just isn't true at all.
One of the greatest, Peter Lynch managed the Magellan Fund between 1977 and 1990. He averaged an annual return of 29% and beat the market 11 out of 13 years. Before making successful million-dollar deals, Lynch was a small investor like you. When you start investing with a small amount of money, you have two advantages to play against the institutions with their money, power, and experience. So what advantages do you have?
I'd do far better percentage-wise if I were working with small sums. There are just way more opportunities. If you're working with a small sum, you have thousands and thousands of potential opportunities. And when we work with large sums, we have relatively few possibilities in the investment world that can make a real difference in our net worth. So you have a huge advantage over me.
So, being broke is an advantage? Glad to hear this from a billionaire. Working with small amounts of money allows you a broader range of potential investment opportunities. You can compare all these opportunities against each other to pick the single best investment. Institutions such as hedge funds and pension funds deal with millions to billions of dollars. It limits where and how they can look to spend that money. Institutions also have investor policy statements, or IPS, which sets legal limitations on what they can or cannot invest in. This leaves you, the small investor, the ability to consider more companies when trying to pick one to invest in. This greater number of opportunities doesn't come without its downsides. Smaller companies carry more risk. As seas get rougher in the case of a recession or economic downturn, the smaller the boat, the more you feel the conditions. Smaller companies experience higher inflation risk, credit risk, and price volatility. On top of that, they experience illiquidity risk, which means having a hard time finding a buyer for your shares if you decide to sell. It's up to you, the investor, to determine whether the additional risk of owning a smaller company is worth the potential payoff.
People have natural advantages.
Yeah.
Let's say what you do for a living is you're involved in the restaurant industry.
Right.
You supply paper products. You supply kitchen equipment. You help build restaurants.
Right.
You saw McDonald's. You saw Chi-Chi's. You saw Chili's. You saw Cracker Barrel. You saw Dunkin' Donuts, Kentucky Fried Chicken, Taco Bell.
These are all success stories.
These were 40-fold. You made 40 or 50 times your money. People are in industries. They're in the publishing industry. They're in the chemical industry, the paper. Why don't they just stay with that industry? You only need a few stocks a decade. How many good stocks do you need in a lifetime? Instead of people that are in the restaurant industry, they're buying biotechnology stocks. Right. The people in the chemical industry
nothing about
nothing
biotech.
about it. The people in the chemical industry are buying oil stocks.
Right.
It's absolutely absurd. People don't understand their natural advantages, and they don't use them.
You have a natural advantage based on what industry you are involved in and your daily observations of the world. Pay attention to where your kids shop, what your friends keep buying, and what your wife's boyfriend wants for his birthday. If you were a marketer, you would have realized how much more cost-effective advertising on Google is than traditional forms, and how much you're paying Google to place your ads. If your kids are nagging you about an iPod for Christmas, you should be curious about who's producing them. This does not mean buying a stock simply because you like the product of a company. You still need to understand its history, management team, competitors, future cash flows, intrinsic value, what's up with the industry, growth outlooks, and risks. By understanding consumer behavior, you may generate a lead for a potentially great investment before it comes across the desk of a professional. Starting with a small sum of money sounds extremely difficult, but you will only need to make a few good investments over your lifetime to become wealthy. A great company is great for decades, so jumping into an investment before you understand everything is a mistake. Thanks for watching. Please like, share, and subscribe, and we'll see you in the next one.